After that, last half of the decade, mostly building fintech ecosystem in India while working with TFM. So, just wanted to understand the audience in the room. How many of them are founders? How many of them are investors? You just need to raise the hand so we can just construct our discussion. So, how many founders in the room? Great. How many bankers? How many investors? Great. So we are having the mix of audience in the room. So we will try to see how we can make it better. Of course, in the structured conversation. I'm not sure how much you know about me, but last 5 and 6 years is something which we are driving in India via Fintech Yatra as an initiative which we have started. And in the Fintech Yatra, we basically travel across nation, go to multiple cities, trying to understand how this ecosystem is shaping up. Honestly speaking, last 10 years, we have come a long way. And I still believe there is a lot to do. And there is a lot more to explore. So with that, probably we can start with an introduction of our panelist. And then onwards, we can take our conversation ahead. So over to you.
Hi, very nice to be here and very esteemed to be presenting here. So I am Supriya. I am part of JAFCO Asia Group. I had investments for JAFCO Asia for Southeast Asia and India. And we have been investing in Asia for the past 40 years and India for the past around 15 years. So we are sector agnostic across multiple sectors we have invested. We were one of the earliest investors in the fashion platform called Shein from China. Sunrate again from China, but now it's actually Singapore, which does cross-border investments, cross-border payments for businesses, which is clocking around $1 trillion transactions per day. And in India, we have been part of investments like Pascare, TwitPay, many other fintech plus other investments as well. So very happy to be here. And over to Elias. Tez.
Hello, thank you, Pankaj. And we both are. He's ex, and I'm current ICICI. So I'm from ICICI Venture. So ICICI Venture is now on its 5th P fund. Some of the fintech investments there are DCB Bank, IndieFi, Zopper. I've been investing in India for about 15 years and had the pleasure to see the journey, which we'll talk about more. I'm heading this ICICI Venture Amplify Fund, which is a VC fund. It's a 1,000 crore fund. We have just done our first close and now looking for new investments. And obviously, fintech is one of the large themes. So looking forward to meet everyone. Thanks.
Hi, everybody. The name is Elias Yazbeck. I'm always humbled and honored to be here, especially with such veteran investors across India. So Helios Investment Partners is the largest private equity fund for Africa investment or Africa Nexus investment. And I'm very pleased. I can't announce the name yet. It will be done in the next couple of weeks. But we are about to close our first investment in a fintech in India that is looking to expand into Africa. I head fintech and financial services in a succinct manner. I think over the past 5 to 10 years, on the fintech side, I'm talking about the sectors first and then on the investment second. Fintech first, I think the pace of innovation of our hosts today was very, very generous with her words around whether it's in Pakistan, whether it's in Europe, UK, whether it's in Africa. At different stage of maturity, you see a lot of innovation in building that piping that drive innovation. I think real-time payment processing, which you guys are taking more and more for granted because of the fantastic platform that's been built here, is not something that we've seen at scale in other markets in the same way, in the same efficiency you have. And that has been for the past 10 years a big challenge that people are trying to solve for. I think you have a lot of emergence of new technology to try to solve a very old problem. I was having a conversation with somebody yesterday. Said payment processing hasn't evolved since the age of King Solomon. Right? It's a very basic, easy thing to do, and yet we can't seem to get it right for some reason. So the pace of innovation, the use of technologies is also accelerated in trying to solve basic problems across different markets, and it's all about financial and all about commercial inclusion, especially in emerging markets. I didn't mention this before, I used to work at Facebook and I used to work at MasterCard afterwards. I was responsible for all of their payment and commerce at Facebook for the Europe, Middle East, and Africa region for quite a while, and solving some very basic infrastructure issues of payment authorization, on getting funds flow from one place to the other. has been consistently a problem, which I think for you guys is a given now. I think on the investment side, what has happened over the past years has been phenomenally interesting, because for the founders in the room, if it's your second venture or if it's your first venture and you were lucky enough to go and raise capital in the year 2020, 2021, you had the brilliant valuation. I really hope that you were able to sustain that growth, because otherwise you're going to have a wake-up call for the next 5 years as to what your valuation expectations are going to be, and that's going to be very, very difficult to sustain in view. I think we've seen a real reckoning that fintechs are the place where you can deploy capital, because those are the players that are solving real-life problems in a way, like you said, that are faster, better, more adapted to the modern world, and leveraging the infrastructure that exists. I think the next 5 to 10 years, if I try to venture this, I think it's going to be. I'll take utopian word. I'll say the US has just launched their real-time payment scheme. India has UPI. Europe has SEPA, which doesn't work. Brazil has 2 large countries and has established their real-time processing. South Asia will figure it out somehow. Africa is still way behind the curve, but they'll get there, right? So infrastructure is, the base layer infrastructure is more or less established. I think the next challenge for the next 5 to 10 years is, how do you then innovate to problem solve off of that infrastructure? How does AI, how does embedded finance start taking a more prevalent role? I'm sure everybody here does not want to take their card out or their bank account out or their card or whatever it is, and just wants to be able to go and process payment. I was in Germany a couple of weeks back. Gas station, from your car, Mercedes car, you pay directly, it's embedded finance. You don't even think about it. You fuel the car, you move on, it goes across. I think a lot of those use cases are going to be very, very important. Remittances and serving the diaspora, there's an amount of wealth. I'm sure it is valid for India, but there's an amount of wealth of people who have moved out of high growth countries and are trying to move back in and don't know how to get their money flows in. And so all of those companies, I think, are going to be very interesting, in a very interesting space to watch out for. So
Thank you.
Try to stick to time.
Yeah, no, absolutely. Thank you so much, and keeping it brief. Supriya, extending that question to you, because you are with JAFCO from the last 10 years now, and heading Asia for them, Southeast Asia and Asia for them. And in Southeast Asia, you have invested in companies like Fundin, DigiPay. Then in India, you must have done companies like TwitPay, Pascare. And seeing both the side of the world, right? India, like how this innovation is happening, plus at the same point in terms of Southeast Asia, right? So what is your observation on that front? How the next, the few years looks like when we talk about fintech, not just within the Indian as a context, but broadly like Asia as a context?
So one thing is that when we say Southeast Asia, actually every country in Southeast Asia is very different. The regulators are different, people are different, political problems are different. So if you look at Thailand, if you look at Philippines, the political uncertainty is very high, and that affects a lot of things, how ecosystem is growing. Whereas if you look at Vietnam, Indonesia, politics is okay, but they have their own challenges. Again, the influences are different. So if you have Vietnam and Indonesia, they have a lot of Chinese influences. And that's also because of the investors. So after China had was stopped to invest in India, a lot of their money flew to Indonesia and Vietnam and the other neighboring countries. And with that, they bring their other influences, the practices, the controls and everything. So that is different. Similarly, in Philippines, all the other sectors have not advanced much there, but the fintech is slightly ahead of other sectors in the same country. So Southeast Asia is not one, very different approaches across different countries. But comparing, let's say, Southeast Asia as such to India, so I would say Southeast Asia is where India was around 4 or 5 years ago. And biggest difference being that they don't have UID, they don't have NPCI, and they don't have the rails, public rails, which India has. And that has been an issue. So even today, they don't have, Vietnam, there is digital payments is very, very frequent and very kind of rampant. But problem is that they don't have UID. So for companies to build on that public rail is very difficult. The other problem is regulations. So like in India around 6-7 years ago, everything was in gray zone and people were just building on it. So in Vietnam, Indonesia, it's still gray zone. So a lot of things like peer-to-peer lending, I see a lot of companies being built and they're just trying to avoid regulations. But if you look at company like funding, which we had invested, so that founder comes from the mindset that he will comply with all regulations, go more, I would say overdo regulations than underdo. And that's a problem with Vietnam because it's a communist country. So if the government comes back strongly, a lot of things can go for a toss, which we saw in China. So China companies were allowed to build and become really, really big. And then the government kind of came down and a lot of businesses were just wiped out. So this is something which we are very cognizant in Southeast Asia and we try to keep in mind of that. But that being said, we are taking a lot of cues from India. So as I said, Southeast Asia is where India was around 4-5 years ago. So a lot of things that we are seeing now coming up in India or came up in India 2-3 years ago, we look for those trends in those countries and try to invest there. So yeah, that is how we.
Great, great. Extending this further, Tej, in ICICI Bank, anyways, like we keep on hearing, like they are investing from the balance sheet, and now you joined ICICI Ventures very recently. So what is the view on the fintech from the ICICI Ventures side, right? I mean, and since this is a venture arm of a bank, so, and we keep on hearing from the last, 1 or 2 years time, is there any maturity in the ecosystem now, right? So really wanted to understand from you, both from a, FI side of the perspective, also at the same point of time from ICICI Venture side of the perspective, what are your observation around fintech ecosystem in India?
Yeah, so thanks Pankaj, and it's great to hear about all the markets. I spent some time in Indonesia. I think if you want to make another $1 billion company move to Indonesia, there's a lot of opportunity there. So I think in terms of maturity of market question, it's evolved quite a lot. I think there are, what Elias was also mentioning in India, I think the first layer of infrastructure is set. UPI, payments, even on the wealth side, you've seen a lot of companies come up. Now it's really like, what do you build on top of this? So credit on UPI, for example, that has emerged as a good theme. And then in the wealth space, different people are trying different things. A lot more Indians are going to get wealthy. So both on the investing, sort of the borrower side and on the wealth side, I think there are a lot of opportunities still. From the bank, obviously Hitesh does the ICICI bank investments, where the bank takes about 10% share in a company, and that actually helps the venture team because we get a lot of deal flow from there as well. There are a couple of companies which actually, one of the companies we are giving term sheet from the venture arm. So that becomes like a good deal flow also. Being in ICICI, we do keep seeing a lot of companies who serve them. What are some of the interesting companies that are coming out? I think at ICICI, innovation is, really up front and center is what I've seen. And I'm, because I came from a venture background, and but there's a lot of freedom to the team to go and explore new ideas. And put money behind founders who are doing innovative things. Obviously, we don't do too much of seed investments, and on the Series A side, we also like to come a little bit, when the revenues are there. So that's so we're not going seed because it's too much for a bank to kind of manage at the seed level, right? But Hitesh has done some of the seed investments as well. So, but we are looking at more, A+ and Series B kind of checks. And the deal flow that is coming in is quite interesting. There are more things happening on the payment side, especially cross-border. There's more things happening on the insurance side. We are seeing few companies there. Wealth as a theme is still kind of emerging. Various people taking various bites at it. New companies being formed, etc. Some scaled ones are there. Deserve is a good example, right? And then I would say we still want to do more on the financial inclusion side, last mile, going to the last mile, like tier 2, we were talking about it, right? Tier 2, can there be some more innovation that can happen there? So those are some of the broad themes we are looking at.
Got it, got it. So, Elias, really wanted to understand from you because we were having conversation outside also. And then you mentioned there could be some of the opportunities probably emerging from other side of the world. But because I'm asking this question mostly in the Helios context, and because you actively invest into Africa as a market, right? Let's say if there is a fintech in India, and if they want to expand to Africa, so what do you think how a fintech startup should identify and capitalize on those market opportunities, right? So, I mean, would be great because there are some fintech founders in the room. So, really want to understand, like, how some of the opportunities are, emerging there.
Thank you very much for that question. I think, first of all, you have to come with a mindset that Africa is 54 countries. It is not one. What will work in Kenya will not work in Tanzania, will not work in Nigeria. And yes, there's some similarities. There's a cluster of groups of 4 or 5 countries that will share some common policies or something. But as a whole, it's a very, very diverse and divergent set of countries that you need to tackle with. South Africa, Nigeria, Egypt, Kenya, for different reasons, are probably the 4 that you want to look at, depending on the product, depending on what you're trying to do, as the key markets of focus. They are some of the most populous. They are some of the most advanced in terms of infrastructure and you're absolutely right, regulator friendliness to fintech innovation. So those are the things that you want to look at. I think doing business in Africa is incredibly difficult. A lot more so than I think it is in India today, probably very akin to what it was in India 10, 15 years ago. I think where Southeast Asia sounds 4 or 5 years behind India, I think Africa is 10, 15 years behind India. So if you want to go to Africa now, the continent of Africa, I think the opportunities are immense, and I think the product capability is not going to be the challenge that you're going to have to face. Some of the innovations, some of the founders I've spoken to, some of the tech you've built, you guys are ahead of the curve on what is available on the continent and what problems are being solved on the continent. To a large extent, you're going to have to maybe scale back a little bit that innovation to ensure that the adoption in taking people on the journey with you on the other side. So that's one. Number 2 is make sure that you have a very deliberate approach on engaging with the regulator, engaging and understanding, explaining what it is that you're trying to solve for, what is it. You'll find a very welcoming ear and a very welcoming setting if you do that. If you don't, the fact that you look a bit more like me and a bit less like them is going to play a will be a big challenge to penetrate in the market. Third view, partner. It is such a deep market. So I think we underestimate. Nigeria is 220 million people. I know compared to India, it's not very material, but it is still one single market that has 220 million. Egypt is 115 million. South Africa is another 18 million. So you have across the continent about 1 billion plus people. You tackle 4 or 5 markets, you have a really, really deep pocket here to do. The unit economics of what you are able to build and the pricing power that you're able to wield makes you very, very interesting as an alternative to the US, to the European providers of services in fintech and technology that is there. So leverage that. See how you can adapt that market, that product to the market from that perspective. I think and the last thing I'll say is Helios has been investing across the continent for 20 years. Because you asked from Helios. We deployed $3.4 billion in about 34 different markets, across 34 different markets of the 54. Come and talk to us. Come and talk to me. If you're really genuinely interested about Africa, as I said, I'm about to deploy a pretty sizable check in a company that is homegrown, not too far from here, BKC and all that, because of their interest in Africa. We want to make sure that we can help you open doors to regulators. We can make sure we're an active investor there, and I think that's the only way you succeed at the stage of maturity that Africa is.
Can I add, Pankaj?
Sure.
I visited Africa, both Nigeria and Kenya, in 2018-19, and I felt like a kid in a candy store because there was so much opportunity when you go from India. So I will say, in addition to what he said, just go visit Africa, because there's a lot.
Absolutely, and even if it's not for business, I think if you haven't been, I did my honeymoon in the Kenya, on the Kenyan side, the safari there, it's mind blowing. So even if you just want to do something different and spend a couple of days there, let me know. We'll hook you up with the right places to sort out, and we'll arrange a couple of meetings for you to do on the side while the family enjoys. So we can do that.
No, absolutely, Elias, and I'm sure people will now plan because you have said it. So, Supriya, next question to you. In the last 10 years, you have seen broadly on both the side, and we have spoke about public infrastructure. We have spoke about NPCI, whatever they have done. In fact, we were talking about what they have launched yesterday. Do you think there is something missing in Indian ecosystem at this point of time, right? It could be within the founder community, within the investor community, right? Anything around that, any thought? And if that is missing, then what we should do? Just to extending this question further, right? So in the last 2 years, we have seen a lot of governance issue with the startups, right? Regulator has also become very, very cautious about what sort of startups should consider while building companies into lending, and they have made it like very, very clear. If you want to operate in the financial services as an ecosystem, then RE plays a very, very vital role, right? So, really want to understand your perspective. What do you think on that?
Honestly, yesterday when everybody would have seen the NPCI product launches, right? With that, I think a lot of startups are wiped out, right? So basically, they're solving a lot of problems which startups are solving. So NPCI and all have done with UPI for Circle and the bill pay for businesses. Those two were one of the very big problems that they've already solved. So that makes like innovation, bar of innovation has set even higher. And yesterday I was listening to Perfure's CEO talk, and he mentioned that compliance leverage is a business problem. So basically all companies needs to be on top of compliance, on top of technology, and that's the only way to do it. So you can't be taken aback by new regulation or any new tech or any data breach or data fraud that comes up, right? You have to anticipate and be on top of it. So what's missing, honestly, I think I can't comment on that because the people here are really, really smart, always on lookout for that. But what should we always do is on top of compliance, tech, and NPCI is setting the bar higher and higher every year.
Got it. Tej, from global VC to Indian VC and transition to corporate side now, right? You have seen everything. In the last 2 years, we have seen there is much more excitement on the traditional financial institution side to actively work with a fintech startup, both from a synergy standpoint to investment side, right? This is like something which is like keep on increasing. In fact, I can see Mangesh is there in the room, and we were also talking with Mangesh. Mangesh represent Bajaj. So Bajaj is anyways like started doing investment into fintechs. So a lot of such new NBFCs, a lot of such new institutions are now coming out, and instead of putting money into the funds, they are just thinking like why not to make a strategic bets, right? What is your take on that front, right? I mean, whether those sort of corporate VCs will be able to drive in the similar way like how in the last 10 years as a VC community has driven on the investment front side, or which one is better? I also don't know, like, it will evolve over the period of time, it will tell us, but I really want to hear your perspective on that.
No, I think market has matured, right? And I had the pleasure of working with a lot of funds from Naspers to Daily Mail Group to Chinese Fosun, then Indian IV Cap, etc. So I think everybody has their own flavor. In India, what has happened is that if you look at the advent of VC, a lot of foreign VCs started shop here first. By the way, ICICI Venture used to be the first venture company ever established. I don't know if you know, but they were early investors in InfoEdge. So they had done about more than 100 odd investments, small tickets back in, and the office used to be in Bangalore before it moved to Bombay. So ICICI Venture operates very independently from the bank. As a matter of fact, bank is a LP in the fund, and rest of the money we raise from outside people, and we have to give them returns. So it's a very much a venture approach. But we do leverage the bank's capabilities. I think to answer your question, we will see more of that because, as you know, you are part of the bank. That banks are always flooded with cash. And they are also, and also institutions, corporates who have a lot of, balance sheet have seen how startups have played out. Maybe they missed the bus, Pankaj, in the last 10 years. And since they have cash flows, they would definitely want to put that to play. I think there will be a interesting, what I'm seeing that the old India Inc. and the new India Inc. Is kind of coming together now. And you have seen some of the listings, recently in public market, and the new age companies have got really amazing welcome, including my ex-company, Exigo, right? I mean, they were like 80 times oversubscribed. So I think people have now started to appreciate what new, innovative companies bring to the table. My friend from MK Venture is sitting here. They have Ashish, they've done a lot of, supported a lot of companies who are coming up to IPO. So that's, very welcome news for young startups, So I think everything is moving, like it's a parallel trains are running, depending on which train you want to jump on. Every train is going up, so that's a good thing.
Got it. It reminds me of in the last 5 years, in the Fintech Yatra itself, we met with almost 3,000 odd Fintech founders in this country. And I can see some of the Fintech founders are also here in the room. Building an institution is a journey, right? Which starts with zero. And the founder, they start with zero and then ride on that zero. It reminds me of one of the writer wrote, Zakir Khan, I'm not sure if you know them. So he wrote like few interesting lines around it. And my question probably then to Elias, and then to all of you. How do you think, what are the 3 things, you actually want to say the fintech founder in the room, right? But before than that, so these are the Hindi lines, Elias, I'm not sure if you will be able to understand, but he said मैं शून्य पे सवार हूँ, बेदब सा मैं खुमार हूँ, मुश्किलों से क्या डरूँ, मैं खुद कहर हजार हूँ, मैं शून्य पे सवार हूँ. So I think the founder's journey is all about, starts with, 0, then to 1, then to 100. And then they do the good for the people, good for the organization, whatever is relevant to do. So to all of you, what are the 3 things you really want to say to the founders in the room, which they should consider from the day zero? And while building that institution, they can keep in mind while building that. I'm sure because all of you is engaging with the founder from the last not almost 10 years, but more than that. And yourself, Elias, you have built institutions. So would be great if you can share those word of wisdom.
So I think number 1 and probably number 2 and number 3. Number 1 is your businesses, no matter what it is, AI, crypto, blockchain, tradition, whatever it is a people business first. Whether it's your customers, whether it's team members, whether it's your leaders. And I've seen so many fantastic ideas, so many fantastic technology platforms built with the nth level of sophistication fail because the people aspect, that culture of firm was not well established, well anchored and evolved with time. So people, 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 people. I think that's the number 1 lesson that I've taken through the years. Number 2 is whatever you're thinking. I was saying this yesterday at the fintech pitches. Whatever you're thinking of doing, I can assure you, it will never work. Right? It will never work. That doesn't mean it's a bad idea. It just means that whatever you are concocting in your bathroom, at a dinner with a friend, or a drink with somebody else, or on a date with your girlfriend or wife, when it hits the market, it will need to change. The reality of regulation, the reality of customers, the reality of market, the evolution means that whatever you have in your mind is that. So find ways, and I was listening to a podcast from one of the co-founders of Netflix, and he said, and I found it very powerful because it's very true, find a way to test your idea in a very cheap manner, very, very quickly. You don't need to go and raise millions of dollars like everybody rushes to go do there when to burn it out and fail. Are you able to do that very quickly? And he was giving an example of a clothes sharing platform, whatever is built. So find that out, because you can be certain that whatever you do will fail, and you'll have to pivot, adapt, agile, and it goes back to point one, people, people, people. The third element is know what you're solving for. Understand that like nobody else does. If you can't understand it, if you can't articulate it, if you can't bring people on the journey with you, whether it's your consumer, whether it's your investors, whether it's your employees, partners, co-founders, whatever it is, then you will be lost on the way somehow. And lost not in a good way, not lost as in, oh, there's another opportunity, let me go and capitalize on that, but lost in the way that you're starting to build and spin off without being able to actually concretize anything. I think for me, those are the three biggest lessons I've seen and are the most important ones I think I would want any founder to kind of keep in mind.
To you, Tej.
Yeah, so I mean, I live my life through founders, and I love that. I think learn from them every day. I think one thing I picked up from what Elias was also mentioning from very, very large organization I worked for, Naspers, they had this approach, now Process, they had this approach of fail fast. So I couldn't agree more. As a startup, you have to experiment number of times. And number of times you can figure out, we launched IBIBO in India. We would have launched about 20 companies within IBIBO group. And at the end of the day, travel stuck, and then Go IBO was merged with Make My Trip. Then we have OLX, we had Flipkart. And all of these companies were really experiments, So I think startup is, unfortunately or fortunately, is an experiment. So I think that fail fast is one. Second is the cockroach approach is what I call, which is, cockroaches never die. So you look at, great founder Alok, Ixigo, his business went to zero, literally, in COVID, and from zero to, listing in 4 years. I mean, it's just incredible. He just didn't die. So many people tried, both internally, externally. He just kept on going, So I think that resilience is, for me, the second thing. And third thing is, what's your mentality? I've seen two different kind of founders, right? One are, which I don't like is I would just want to flip the business, create a feature and sell it, which is fine. I don't think there's anything wrong with it. But the founders I generally like to back are who have 15, 20-year vision, right? That's their life. So not like, I don't want to call or name it as fly-by-night operators, but people who have, ability and desire to build an institution. Like another great company I backed was Kisht. And, those guys are just on it. Like they have faced many challenges, many pivots, etc., but they just kept going. Or Delivery is another great example, right? So I think those are institutional companies, and I think Delivery will be a $10 billion company, I have no doubt, in 5-7 years. So those are probably my three giveaways.
For you, Supriya.
And they've covered all. But I would say that as a founder, it's very enticing to start raising money. But raise only if the business needs, and raise only if you are ready. Don't raise for any other reason. Because it's a big responsibility, any money that you take in, and it's a big burden, which affects your business, which affects how you function. So raise only when you need. And when you are raising, please don't get stuck up on valuations, because we have seen so many companies finally raising at high valuations, but not ending anywhere. So that founder-investor fit, and even what the company needs. So there are three levers when you're raising. It's time, money, money mean what amount you're raising, and the valuation. You can't optimize on all three. So you have to pick one or two. And I would say time and funding and the fit is the most important. And a lot of companies pivot over time, which Tej was also mentioning. So don't pivot for investors, pivot for customers, pivot for the market. Never ever pivot for investors and what they're looking for. I think founders have become and have always been very, very resilient, smart, and all. So we're all very proud of them. So yeah.
Got it.
Can I
So,
just
yeah.
add one quick thing on valuation? Because I think it's a very, very important point. A lot of time, I see founders are more excited about the sticker price in the press article to say, oh, we just raised at 200 million. We just have now crossed $1 billion. The point you're making around responsibility and burden, the type of investor that will get you that valuation will ride you like there's no tomorrow. You're going to have to make compromises on your on people like me who have no idea how to build a business like you've done, right? So be very, very careful, be very intent, and like Tej said, I think if you're a founder that is looking at that a true vision and solving for something for the market, it shouldn't matter. You need to get your fair valuation. Please don't misunderstand, but it shouldn't matter. At the end of the day, it's the end goal of what the money that you're raising enables you to do, rather than the PR article. In most cases, those are not secondary rounds; they're primary rounds. So you're not going to see a dime, anyways, whether it's a 200 or $300 million. So just
Yeah,
I think
I just
that's
wanted to add a point to what Elias is saying. Sahil, back in, when we were doing fundraise, he got a term sheet at 450 million valuation, and he rejected it. He said, I'm not ready for this valuation. It's a very smart thing to do. SoftBank was giving him 500 million. He said, I don't want. I only want 250. So, I mean, the calls he took so that, he doesn't have this crazy pressure of then, like the investor riding him, and a big elephant in the room who can then push him around. So that's why I think he kind of built it well. Yeah.
No, absolutely. In fact, I can recall one of the conversation wherein one of our portfolio, they got the term sheet of something and they have taken it, and we have said no, don't take it. And now we are seeing that struggle with the company, right? Because at this point of time, then they are finding very, very not relevant sort of deals they are finding in the market. But so I think we are just having 40 seconds left. Just last question. In the last 1.5 year, in India specifically, we have seen a lot of regulatory side of the clarity, right? What I believe is a lot of times fintech innovation starts with a gray area, wherein the people come up with an idea and probably not regularized, and then once they reaches to a scale, then regulator comes with their own set of guidelines, right? So and then those sort of transition happened with any sort of institution journey. How do you see, like, as a founder from the day one, they should navigate this? I think, and most of the time during that transition, I found 70-80% of the startup gets failed, and they find very hard to navigate from those situations. I'm not sure, like, at this point of time, in India as a market, we are seeing a lot of such startups are facing this. In your experience, whatever you have dealt so far, what is your suggestion to the startups who are building into the fintech as a space, and how they should navigate around all of these things?
So time's up here, so I'll be very brief. Regulators and policymakers and other stakeholder customer of yours from day one. Whatever you do, how well defined or undefined the regulatory space in what you're endeavoring to do, you need to be able to engage, create ties, communicate, explain, even if what you do is not in the regulated space or has an official license or whatever it is. That is the single most important advice that I can tell you, because regulators are only getting stronger and stronger and are real market makers. You asked earlier who's a founder, who's a banker. You didn't ask who's a regulator. There's a panel at 1:30, I think, or 3:30 on regulators. I would encourage you to go see, because the way they think, and we talk about neobanks and what it's all for, will give you the roadmap of where you want to be, so that in 5-10 years you're still relevant.
To you, Tej.
I totally agree with Elias. I think
Since you were one of the early guy who helped Bharat Pay in navigating some of these pieces, so yeah.
Yeah, I mean, I don't blame the regulator to begin with. I think their job is to regulate, their job is to watch out the interest of the, the one and the bottom, right, and the top and whatever, I think, I also saw the craziness that happened in China on P2P, lending platforms, to the fact that Fosun was invested in one of the companies where a lot of people lost money. There was, literally, people were throwing stones at Fosun office as an investor of that firm. So I don't blame them. I think educate them. And there are some very smart people in Indian, regulatory side. Once they have to be, also it doesn't, a lot of things don't come to the radar, like you said, Pankaj, till they become big. But if you follow and the rules in India and you explain it to them, I think they are very open-minded, at least what I've seen. And if you spend time with them to make them understand, and it is a hard job, it's not easy. But like Elias is saying, they are also stakeholders, so, and they regulate, so you better keep them happy. Yeah.
I think if it's a gray zone, just put yourself in that position and see what the white would be. Try to be as close to white as possible. It's good to overdo than underdo, because the cost of underdoing is very, very high. I think that's how we navigate through our portfolio companies. Just try to be closer towards the white side and be more prepared for any surprises.
Got it. So thank you so much, Elias, Tej, and Supriya, for joining us. And hopefully the founders in the room must have taken some sort of insights from whatever you have shared, or the word of wisdom. And let's make fintech ecosystem much more bigger and better in India. And yeah, thank you so much.
Thank you.
Actually, on that note, we will encourage the Q&A to happen. So if you have a question, please put your hand up and we'll pass on the mic to you.
Yeah, sure. Any question around like investing? So these three investors, global investors, fintech founders in the room, any question comes to your mind, you can shoot that question. Yeah.
Hi, my name is Gagandeep. I'm the co-founder of Novamind Tech. We are an AI and automation company. The question is not linked to the work that we do, but in general, there are companies or there are ideas that might not generate revenue in the beginning. And obviously, as an investor, you want to see revenue. But what is your mindset about an idea that could make a difference but probably not generate revenue in the short term? How do you handle such scenarios?
You, Tej.
So I think more seed. Are you guys doing a seed?
So if revenues are not there, I think that's less of a hurdle. But if there is no visibility or no roadmap to revenues, then it's because we are also we're all for profit. So if there is no visibility of revenues, then we are less kind of going forward for those deals. But if a path is there and there is a visibility roadmap, then having no revenue is not a hurdle.
I'll just add to that. Please, one thing as founder you should do is identify investors equally well. Because there are a lot of investors who do seed stage investing. Like we don't do seed. We come in at, A or, B. So I think just, and there, Pankaj will tell you like 10 people who do seed investing, including his fund. So, and we look to them, honestly, when we are looking at our deal flow. And their job is to back no revenue companies. So
also, there are a lot of impact funds also for whom revenue is not doesn't matter at all. And those would be the most suitable candidates, basically. And there are quite a few impact funds which have come up recently.
So in my view, for every stage, for every subject or domain, there are different type of investors, right? If you're at the idea stage, I'm sure there are like a lot of people in the market who back ideas only. There are people in the market who also invest idea plus AI sort of models. It is the function of like to whom you are reaching out, I think. But since you go to the much more formal structure, which are like early stage VC funds, so in that particular sort of category, you will find some of the funds who also do pre-revenue, those sort of investment also. In fact, in our case, we have invested in some of the companies at idea stage also. We fundamentally come at that stage wherein we push people to leave their job and start, right? So we are having one of the initiative which we have launched in-house, wherein we do ROCA of the founders, right? So whenever we hear the idea, we transfer 11,111 rupees to them as like a token, right? Because we are fundamentally believing on the idea, right? So it's more about like as an investor, whosoever is there in the market, what sort of stage they come at and what they are liking it. But I'm sure there are many who can be interested in this idea, of course, but happy to chat after this.
I don't know if that will make sense, the expression I'm about to say, but be also careful that the leash is not more expensive than the dog that you're getting, right? So I think, Supriya, you said something very important. only raise when you need to raise, right? There's other ways to fund your business. The minute you raise, even from seed investors, at some point they're expecting a return. So that point may come in 2 years, 5 years, 10 years, depending on their appetite, depending on the view. But that burden, that stress is on your shoulders. If you don't think you're anywhere close to revenue, you have visibility on how you're going to monetize this, and you're not OpenAI, then I would think twice about, is this the right time for me to raise? And how much do I need to raise? And what's the solution? Because I can tell you, we've also invested, even as private equity, in idea stage. But I've taken 90% of the business.
Anybody else has a question? Put your hand up and we'll pass on the mic. All right then, please give all our panelists a huge round of applause. I think it was a very informative and an extremely engaging session. Also love the fact that you quoted Zakir Khan's tune. That's one of my favorite poetries. I would request all four of you to kindly come forward for a group photograph.